afternoon, everyone, and welcome to Stock Market Today. It's Ali Corman, Ed Carson here with a breakdown of the action in today's session and this week. And the stock market rally is starting to struggle, Ed, and it's a bit divided.
Yeah, a couple of weeks ago we had a broad-based rally. Doesn't really feel that way anymore. Going to take a look at a few stocks that are in stronger areas of the market and close tightly. Callon Petroleum, General Dynamics, and Molina Health.
All right. Well, first, let's take a look at the major indexes today, kicking things off with the NASDAQ composite, which finished the day down 1.3%. So the hardest hit by a lot. We had the S&P 500 down about 0.25%. The Russell down about 0.5%. The Dow in the green today, up 0.4%. So the NASDAQ now, that support at the 50-day line is in question.
Yeah, closed below it for the first time in a few weeks. I mean, didn't close decisively below it, but definitely not a good sign here. Saw negative action. This is where, I mean, we're really at an inflection point. You know, are we going to break down, or are we going to hold support? Are we going to rebound? It's going to really change how we look at the market and how investors should be handling their portfolios. Probably should already be pulling back somewhat, but you know, we're really at a point where is it going to get a lot worse, or are we going to steady here?
Right. I totally agree about it being a key inflection point, because it seems like if we break below the 50-day, we could be headed back towards those lows. I know David Bryan was tweeting about that earlier this week as well. But if we see a strong bounce at the 50-day, that's usually a spot where we like to add market exposure.
Yeah, and it'll just depend on the setups. There are some stocks setting up. I mean, those are mostly in strong areas. The places where they're weak in the NASDAQ, I mean, you know, some of the underlying sectors are even worse. Looking at chips or looking at, you know, some of the other areas really broke down. So it'll be interesting to see what might be setting up if the market does strengthen.
Well, let's take a look at a number of other charts to add perspective on the market action this week, like a look at the S&P 500. So right around its 200-day line and the 21-day line as well. We can also look at the Dow, positive today. So a reversal right around its 50-day line in Thursday's session, continuing higher today, though off of its session highs. The Russell 2000, so here's the IWM ETF, starting to break down further here this week. And MDY, mid-caps, Harold and a number of others on our team have pointed out the significance here, a great visual look at the struggle that we're seeing for mid-caps as well, Ed. And now let's take a look at some of the groups. So metals and mining, here is the XME ETF, so down a little bit for the week, but holding near highs after an impressive move. So some tight action here up at highs. We also have energy on the move again this week. The XLE ETF up over 3.2%. Healthcare, we've been talking about, really accelerated this week, up 3.4%, Ed. So, you know, we've been taking advantage of that on leaderboard with a number of names like Vertex and Eli Lilly, not recent ads, but have really started to pick up their gains. And chips, well, continuing to see that area break down 7% this week, the SMH ETF. And let's take a look at the highly valued growth area, speculative growth, the ARKK ETF, down 10% this week. So really starting to see more pronounced divergence at this stage, whereas we were seeing a lot of growth and tech start to move in mid-March, when we did see that follow-through day.
Yeah, and as Chris Gessel has been saying, you know, on IBD Live, we've seen a lot of these. A lot of it was, you know, short covering or buying bargain basement stuff, and you can see that with ARK and SMH. Like ARK went from about 50 to 70 and is back to about 60. So within a week or so, and basically just over a week, it lost about half the gains from that strong late March rally. And definitely a lot of escalator ups and elevator downs that we've been seeing. And yeah, it just makes it tricky. You look at the S&P and go, okay, that's not great, but not that bad. But it really is dividing as you're saying.
Yeah, a lot of bottom fishing that we've seen, but a lot of impressive moves too by some stocks in the leading groups in oil and gas, for example. But let's take so speaking of, let's take a look at CPE, Callon Petroleum, which is starting to tighten up right around its 21-day line ad. So in a sector where we have seen so many extended stocks where the only entries that we're seeing now are ones that are pretty aggressive and a lot of extended stocks. CPE is not too extended here.
No, it's not. And you should take a look. There's a lot of energy stocks, and I'm not saying this is the only one to look at. There are many to look at, and there's some good stocks out there. But this has tightened up. It used to, and it also was trading at the 200-day line, then finding support at the 50-day line. Now it's finding support at the 21-day line. And yeah, this one we call a porcupine because it has all these intraday spikes, and then it reverses lower. But it's looking a little better on a weekly. I mean, oddly enough, what it's doing is trading very tightly. This should be showing a 3 weeks tight, not maybe not at the moment, because it takes a little bit of time, but MarketSmith will soon show probably blue shaded area over that area. That's a 3 weeks tight. That's a bullish signal. You could probably use that as a way to get as an early entry, or just use not an early entry, use that as an entry, or just use the consolidation buy point that's still there if it breaks out. Knowing though, those intraday spikes are a problem. So if you want to get at it, you should try to probably not get too aggressive and try to buy as quickly as you can.
Yes, that definitely makes sense with that one, Ed. And also, we are seeing defense stocks on the move this week. So here's a look at General Dynamics GD, which is trading tightly around this 240 level.
Yeah, and there's a whole bunch of defense stocks that broke out. I mean, technically, General Dynamics was already in a buy zone, but it really took off in late February as Russia's invasion took place, ran up like a lot of other defense stocks, and then it's been consolidating. On a weekly basis, this should be a flat base after today. And yeah, that line works on a daily or a weekly. So the flat base, the high is, technically the buy point is up pretty high, but there's actually going to be a 3 weeks tight within that. Not that that's particularly actionable, but it sort of gives you that feel of this is sort of meaningful. And so if you cleared that 3 weeks tight area, which is a Friday's high, really, then that would be the bulk of the base. And so it'd be a way to get into this at a relatively safe spot, a little bit early, but not really that early. And this is, that whole sector is doing pretty well. And just seems like defense spending is going to be up around the world for a while.
Right. I mean, we've seen a lot of upheaval underneath the surface. And if you want to capture gains, something helpful is to make sure that you're not buying extended. So looking at a stock when it's clearing a logical resistance level versus waiting until it breaks out to highs is something that can help you get those gains before you start seeing that rotation hit some of these names. So something to keep in mind there with that tight action. And last but not least, let's take a look at MOH, Molina Healthcare, because again, the medical sector is one that we should be paying attention to with a lot of stocks on the move in that area. And so a nice setup here for MOH.
Yeah, this one broke out like a lot of other health insurers, and this one has stayed in the base. A couple others have moved out of the base, but this one now has sort of a little shelf. Again, if we go to a weekly chart, this probably didn't see if it tumbled off, but yeah, that's going to be it. It found support during the week at the 10-week line, so then rebounded right around sort of the old buy point, get really close, found support, bounced, and now it's 3 weeks tight. It already had a tight pattern, and now it's a 4 weeks tight. It just means it's 1 week longer. So just again, you could probably buy it now or buy it as it clears this area because it's still technically in the buy zone, and it just provides an add-on or just a new position place for you because this is an area that's doing well. Should show sort of like offensive growth in an uncertain market. Health insurers are probably going to keep collecting checks from the government and insurers.
That's right. Okay. Well, thanks for that review, Ed. And now, as we wrap, let's talk about the game plan for the week ahead and what investors should be doing with their portfolios to prepare for another week next week.
Well, generally, I think people should be keeping their exposure light, and they might be thinking about reducing generally. And if you do stuff, try to go into sectors that are working, but don't get all concentrated. Don't find five really good energy stocks and just buy that. I mean, that's why I try to show you from a variety of sectors,
Right.
because that would be something more along the lines you want to be doing, finding things in that regard. Again, you don't have to do anything at all. You might want to be scaling back, but trying to make sure that one issue is that a problem with the divided rally, and we had this all last year, it seemed like, is that you don't know if they're going to rotate to another sector or is the whole market going to fall down.
Right.
It's just a trickier situation. A narrow divided rally is just fraught with peril compared to a broad base advance, just a more uncertain footing. So definitely, definitely do think of caution when you're looking ahead for this week.
Yeah, and also I think stay on your toes because as you mentioned, we are at a key inflection point. So envisioning what could happen next week, the different scenarios that might play out, and some of the extreme scenarios, because we never want to get caught flat-footed either direction, whether that's taking advantage of new strength in the market, like when we saw at the follow through day. You need to act on that, not get crazy or anything, but not ignore that market signal. And likewise here, if we do see a big break, we can't still be in this, strong rally mode. We have to adjust for that. So I think it's important to stay nimble and see what next week brings.
Yeah, and I would just use the analogy sort of like in basketball, if you're on defense, you try to make sure you stay on your toes so you can go either direction or front or back, as opposed to if you lean one way, the other player is just going to go right around you the other way. So you just have to be ready. Don't have a bullish or bearish mindset per se. Be ready, to just take on either way, as you said, much better than I did.
No, I was envisioning basketball myself, so you really brought that to life. What I was trying to, what I was trying to so thanks, Ed. And thanks to everyone for watching. We're going to be back, of course, next week. But in the meantime, if you want a little encore session, make sure you head on over to Stock Tales because in 45 minutes, I'm going to have a chat with a professional swing trader, Ryan Pierpont. He's great in the FinTwit community. So looking forward to getting to chat with him. So we'll see you over on Stock Tales live on my YouTube channel. And we hope you have a great weekend, everyone. See you next week.